Is here. The yen extending gains, trading near a 7-week high against the dollar this morning.
Yeah, it's traders. The yen is still benefiting from the risk aversion theme, especially from the sell-off in Chinese stocks we saw yesterday, and of course, the euphoria over the Japanese elections as well. But everyone's looking very closely at economic data, and of course, the Chinese stock market direction later today to see whether there's a further traction in the yen strength. There's a lot more calls actually for 90, and today even we're hearing talks of technical analysis. Calling for 87 now, as strong as 87. But what could actually check the yen strength in the immediate term is going to be the RBA decision. RBA is going to be coming out. Of course, it's going to keep rates unchanged. That's largely expected. But the market wants to see how much, kind of signals it sends.
So fair to say the strength of the yen could be short-lived?
Well, yes, that's right. Yes, depending on what RBA signals later today, markets looking for the Aussie yen and the Kiwi yen to actually gain some traction if the central bank actually signals rate hikes could come as early as October.
And what are the chances of that indication?
There's a 65% chance, markets pricing a 65% chance that RBA will be raising interest rates as early as October. And I'm hearing targets from banks like a National Australia Bank for 85 in the Australian to the US dollar.
And, talking about data, Australia is expecting GDP figures as well.
Yes, exactly. Later this week, and the traders are saying the chances are RBA would have already gotten some wind about the extent of the economic data there, and chances are it's going to be surprising on the upside, and they are going to price that in as well. Not forgetting today as well, we have Chinese PMI numbers, which everyone's going to be looking at very closely, especially the commodities market, and that will of course filter back into the Australian dollar as well.
And as far as the yuan is concerned,
the yuan, unfortunately, traders are not expecting the yuan to actually strengthen anytime in the near term. They are expecting that any yuan story is going to be a 2010 story, and in this second half of 2010, as a matter of fact. They're saying that the Chinese authorities, most people are quite the traders I'm speaking to, quite in agreement that the Chinese authorities won't be allowing the yuan to gain until they are very comfortable with the extent of the economic growth that's involved in China.
Okay, Trish, let's get assessment from our guest today. And, of course, Trinh is Senior Currency Strategist at RBC Capital Markets. She joins us from Sydney. Sue, good day. You don't expect a rate hike, but you're watching closely for any signals of a tightening cycle, yes? Pretty much like what Trish said earlier.
Absolutely. We, as with the overwhelming consensus, are looking for the RBA to leave rates at 3% today, but we'll be looking very closely at the accompanying statement in terms of what it gives away in regards to the timing of the likely first hike. And certainly it's really a case of when, not if, the RBA hike. And given market pricing, there is about a good chance of rate hikes starting October to November.
Okay, looking at your target, you're saying 85 is a key resistance level at the moment, and the Aussie will be well supported on dips.
Absolutely. Aussie dollar has effectively traded an 80 cent to 85 cent range over the past month, and certainly we'll be looking to accumulate longs on Aussie dollar towards the bottom of those ranges. There is a very good chance that the lows that we saw last week and the week before at 81.50 represents the low for the next month or so, so that would be a pretty good entry level from our perspective on getting long Aussie dollar. We're certainly looking for Aussie to eventually take out the 85 cent barrier in Aussie dollar and ultimately head towards 88 cents. I think that the path will be paved for that eventual rally once the RBA do indeed embark on their tightening cycle.
So, Trish here in Singapore, we have an email from Leo, and he wants to ask about the same topic, about RBA's decision as well. He's saying that what kind of effect would it have on the Aussie yen if RBA signals that rate hikes are a possibility? What kind of targets are you looking at?
If the RBA do signal its intention to hike rates as soon as next month, because we don't expect a rate hike today, I would imagine that would buoy Aussie yen towards the top of the range, a likely move towards 80 cents in the very short term. However, I think for Aussie yen, the greater dynamic at play over the next month or two is probably going to be driven by dollar yen. Certainly the crushing defeat of the LDP party in Japan over the weekend certainly lends a pretty compelling story towards dollar yen downside over the next 1 to 2 months. If you look across the G10 space, changes in political direction are unambiguously very positive for the currencies involved, certainly in Japan at least. If you look back to 1993 when the LDP last lost, that was very bullish for dollar yen, which dropped about 5 to 7 big figures in the month after. If you look at a more sort of recent example, say in 2007 when the LDP lost the upper house control, that was also very bearish for dollar yen, generating a 5 big figure sell-off for dollar yen. So I think we'd prefer to fade rallies in Aussie yen towards 80 cents, back down to 73 cents.
Right, Sue Trinh of RBC Capital Markets. Stay with us. Pick up a discussion with our guest today, Sue Trinh, senior currency strategist at RBC Capital Markets. She joins us from Sydney. Sue, we heard from Heidi, a blowout in the capital current account deficit. Your take on that and the impact on the Aussie?
I think that the data that we've just seen, the current account, along with the housing data, is very symptomatic of the sort of data that we've seen over the past few months, and that is a very mixed set of data. But again, the housing data proving very strong, and the RBA have already pointed the finger at the housing market as a potential source of inflationary concern. So really, that does nothing to really change our view that the RBA will be in a position to hike rates potentially as early as October, and if not October, more than likely November. So, again, I would imagine the current account figures will be likely relegated to the sidelines and have fleeting impact on the Aussie dollar.
There's a question here from our viewer, Jeffrey. He wants to know about the Aussie dollar yen carry trade into 2010 if risk aversion continues again.
Again, I think that Aussie yen is ultimately very range-bound. We're talking 73 cents towards 82 cents on the wide for Aussie yen, although it's very much a buy-on-dip story for Aussie yen over the longer term, just notwithstanding the short-term likely momentum to the downside. So, again, RBA is likely to be one of the first cabs off the rank in terms of G10 central banks to hike rates, with the exception of the Nordis Bank, which is likely to hike rates in October. That materialisation should ultimately bode very well for Aussie yen on dips on a carry trade basis.
In 30 seconds, Sue, the Aussie against the Singapore dollar. A question here from a viewer who wants to know if you see that falling in the near future.
I think overall Aussie dollar outperforms across most of the G10 and including most of the Asians. Aussie Sing is ultimately a play on Aussie Euro, and we're very bullish on Aussie Euro over the next 3 to 6 months.
All right, Sue Trinh, senior currency strategist at RBC Capital Markets. Thank you so much for your thoughts today.